Good morning, everyone. Good morning, sort of Gareth and Jackie as well. We'll just sort of get started into it. So I'd just like to introduce yourself and Veran and just kind of go from there.
Okay, yep, thanks, Ewan. Hi, everyone. My name's Gareth, and I'm one of the principal consultants at Veran Performance. I'm joined by my colleague Jackie, who's one of the senior managing consultants. Between us, Jackie and I have 20 plus years experience in a variety of fields, including commercial, finance, as well as HR and recruitment. And we specialize in finance transformation at Veran Performance. For any of you who don't know who Veran are, we're a boutique technology agnostic consultancy which has been working with a variety of businesses to design, deploy and optimize their HR and finance services using modern technology and leading practice.
Hello everyone, I hope you're well today, and thank you to Ewan and Gareth this morning. So before we move into why recession-proofing is on finance leaders' minds, can I ask you to complete a poll which should be coming up on your screen now? The poll, it says business should prepare themselves for a recession now. And if you could give us a yes, no answer on that. Thank you for that. So as part of that, one of the things I just wanted to talk about is recessions are a normal part of the economic cycle. During a recession, most organisations will be impacted. And we recently saw a very large recession back in 2020. And it was the first time the UK had gone into recession in 11 years and the largest annual decline in the UK economy in 300 years. And for any history buffs out there that want to know the previous largest decline, it was actually the Great Frost in 1709. The emergency COVID transformed the way a great number of us work and impacted the operating model for a large number of businesses. And although we're not in the recession at the moment, there's a lot of talk out there about whether the UK economy is expected to shrink or whether prices will continue to rise in 2024. So with this outlook in mind, and as I can see from the poll, quite a few of you are starting to think about how we can plan on navigating economic downturns and mitigate its impact on your organisations. This and a number of other factors we'll be discussing can lead finance leaders to consider accelerating any planned finance transformation, as this will help them to optimise their processes. I'm going to go straight into another poll now, and that's very much about, was your organisation prepared for remote working when COVID hit? If you could give me another yes, no, that would be great. Brilliant, thank you. So I wanted to raise an interesting conversation that Gareth and I actually had with a colleague about the most recent recession, and they described it as a HR recession, which I must admit surprised me and showed to me that the work finance teams do in a recession isn't always visible to the whole organisation. Now, Gareth, I know you talk to HR leaders regularly as well as finance leaders. What was your thoughts on this?
What I want to say includes far too many expletives for a webinar, but it goes along the lines of about time. Unfortunately, rather than this being a maturity development, I think they had to get involved because there was a larger aspect of managing people in the workforce during the recent recession. And rather than the usual perception of finance playing with their abacus and then laying down the law for the business to shake their fists at, HR had to stand up and support. That's why this conversation is so important. And for many HR leaders, I think it's probably the first time they'd seen the power of data and the value of analytics to help them plan activity. So now is a great opportunity to set ourselves up for the future and to engage HR leaders to continue to develop their understanding. So they're beginning to get involved, not just when a recession occurs, but when there's a shift in operational requirements or funding changes or expectations for savings to be made, any of those kind of different factors.
Agree, Gareth. And from an overall point of view, expectations of a recession or a downturn is a really good opportunity for organisations to look at economic inefficiencies and any opportunities they might have. Certainly during the COVID crisis, as I can see from the poll, a few people were prepared. A number of us weren't. But during then, inefficiencies in finance processes became clear. As everyone moved to remote working, without much preparation, it should be said, finance leaders and teams had to reconsider the traditional way finance processes have worked. We've been very used to all working in an office in finance teams. Enforced home working has changed how we think of work. Processing paper checks, retaining hard copies of information just wasn't feasible when we were all at home. And we could no longer walk to a desk to get documents signed and approved or discuss forecasts as previously expected. On-system processes needed to be put in place. Also, with the uncertainty, finance teams needed to react quickly, providing more nuanced insights from data to ensure their organisations thrived. As expected, there was a concentration on cash flow. You would expect that during a crisis such as the one we have. And also business plans. Previous predictions were rightly torn up. And I know of at least one organisation who seemed to repeat their business process continually during lockdown. Finance teams were often battling finance systems that could only give them the data and information, or I should say, couldn't give them the data and information they require quick enough. And that we really had to enhance our MI offering. For some organisations, they also need to consider the impact of government initiatives. If we think about furlough hitting quite a large number of employees and any expected reporting requirements that might come out of this, we were all really doing things on the fly. Alongside updating their expectations of traditional income streams.
Why is it that that finance leaders are sort of choosing to invest now when sort of cash flow is getting a bit tighter? Isn't it sort of a period where she'll be battening down hatches?
Absolutely, and actually sometimes you could think it's about conserving your cash now. And I will go into this, but I will say it is quite normal for finance leaders to think about their priorities. When we were looking at a Gartner article as part of the conversation here, what will finance focus on in 2023? It became very clear that finance leaders have put finance transformation on the top of their list for finance priorities, with an investment in technology to expedite finance transformation also high on their priorities. This is an opportunity for finance leaders to review their inefficiencies and opportunities before any further potential downturn. Unlike COVID, we've got a chance to prepare now. As well as looking at the skills and capabilities of their finance teams, finance leaders have to consider how does a remote or hybrid finance service work now? And Gareth will touch on this later. A move to cloud technology would provide organisations with the flexibility required for this new normal, as well as reduce costs and free up resources to do more value-added activity. And that would be very important when you're thinking about how to react to reduced cash flow. Finance transformation and investment in technology is as relevant for SMEs as well as large organisations. It isn't just for those organisations considering tier one products. Often it's about understanding how technology and best practice has moved on. Now I'm going to hand over to Gareth because I know you worked on a project recently which might be of interest to actually raise here. Gareth, would you like to give some insight?
Yeah. So we worked with a large charity organisation who was using a single entry bookkeeping system and manual in purchasing processes. And walking into an office with bank upon bank of filing took me back to the late 90s, but they honestly believed their processes to be leading practice. And in fact, they were, but very much based on limitations imposed by their technology. By demonstrating the capabilities of tier two systems, they were able to see the art of the possible and how their processes could be improved. And they ended up investing in a new system with payback period of less than 2 years and ongoing savings that they are still able to track today.
Thanks, Gareth. I think Gareth's touched on this, and as mentioned previously, data and analytics was key during the COVID situation. One of the other top priorities Gartner highlighted was actually defining an analytics and data strategy. I'm going to quote from it now, and it was felt that by 2025, 50% of FP&A leaders will have enterprise-wide data strategies as a key responsibility. Analytical tools can help finance teams to get relevant insights from their data. It can help drive strategic decisions by business leaders. Planning tools can help with the what-if scenarios, allowing organisations to plan for a range of eventualities. The data strategy should also consider governance to prevent reputational risk, and we've seen that a fair few times with organisations accidentally leaking information out there. Alongside this, strengthening internal controls and ensuring regulatory compliance will safeguard against any loss of stakeholder confidence. Now, I'm going to really look at summarising some of the key takeaways from this section. So the first off is Gareth's point about HR leaders. The wider business interest has been piqued through the pandemic. Do keep the wider organisation involved in future proofing. Forward thinking can help you invest in the future, plan for challenges and maximise any opportunities for potential economic downturn. Do consider your data and analytics strategy to help provide the information you need for business decisions, as well as strengthening your internal controls. For finance leaders who plan for a downturn in economic growth, this can be a great opportunity to ensure their organisation not only survives, but thrives. Now, we do want to give you an opportunity to ask some questions. So, Ewan, is there any questions in the chat before we move on to the next section?
No questions as of yet, but if we just give it literally just a moment, just in case everyone wants to type anything in. With this Q&A section as well, like I said, so just if you've got questions, just type it in throughout. We'll answer them kind of as we go, and I can ask them for you. But yeah, if there's no questions coming through, if someone's typing one now, I guess start the next section, and I'll let you know if anything comes through.
Thank you, Ewan.
No worries.
Gareth, over to you.
Great. So we're now going to start thinking about how transformational activities can help manage labour shortages. So I'll ease us into the people side with a few statistics, again from a Gartner report from 2023, that support this idea. So up to 81% of eligible workers will be hybrid or remote working in the future, which is a pretty large stat. And then also turnover is going to be 20% higher moving forward. So I think it's really clear that finance leaders need to be aware of this and plan to achieve productivity gains from their technology or processes that they can utilize to benefit the organization and their workforce. I think we can agree that it's well known amongst finance leaders that one of the biggest opportunities they have is to invest in technology to reduce costs, create new capabilities, and right-size their operations. And we see this every day. So when we're working with organizations, quite often the investment case pays back within 2 to 5 years. So there is obviously a payback on some of these aspects as well. Through adoption of cloud, robotic process automation, analytics, or other tools, we see this play out on many of our projects. So reporting up to 30% reduction in time spent on non-value add activity, such as manual reporting and analysis. And this doesn't necessarily result in a direct headcount saving, but it can often lead to release of time to finance professionals so that they can concentrate on value add activities and help develop a critical partner relationship with business users. It's also fair to say that a lack of critical talent is also seen as one of the key variables threatening to impact business growth and profit, and that finance leaders recognise the importance of talent and the significant hurdle created by deficiencies of critical skills in analytics, emerging technologies, process design, and other areas. However, the lack of focus enterprise is really quite striking. So in a recent Hackett Group research paper, I've missed our poll. Where was the poll? We didn't have that. So I'm going to ask a quick poll and we'll come back to this section in a second. But I just want to know, does your business have a recognized initiative for retaining the right skills and talent? So as we said, and the stats will come in and we'll see whether they agree or not. But a recent Hackett Group research paper reported that only 8% of organizations said that they had a formal initiative for retaining the right skills and talent. So it demonstrates a major misalignment between resource plans and the business's top priorities, which can have a significant negative long-term implication. Okay, so that's actually 67% saying yes, you do. So actually that's a really positive side of things. I think it's clear, though, that finance must be able to properly evaluate enterprise risks and reflect the impact of those in multiple planning scenarios, so they are ready to act as changing conditions materialize. I think Jackie's already mentioned a digital strategy, but also an analytics and data strategy should be priorities for finance leaders. Implementation of relevant analytics and data tools help finance teams with the requirements for scenario modeling, to aid planning and strategic decision making, and it also facilitates information for the leadership team to react to opportunities and ensure there's funding to facilitate this growth while retaining strong financial operating disciplines. Finance leaders should also review their processes to make them as efficient and effective as possible, and where possible, utilize robotic process automation. Automation can help address the resource challenge that organizations are facing. However, processes may need to be redesigned to facilitate this. Automation can also improve employee satisfaction and helping to prevent churn as it speeds up processes, removes onerous time-intensive tasks, and allows finance teams to concentrate on the more complex value-add activities and basically what we're there to help the business with. Oh, Jackie, you're on mute.
Thank you. It was always going to happen once. Can't disagree with you there, Gareth. I remember building complex spreadsheets to pull out information required for finance directors. And it was always great effort to provide spend in a way that facilitated decision making. But it always needed manual input every month to update. However, when we actually looked at some of our systems, we were able to automate this information. Despite contrary advice in some cases, we could use system capability to capture the data we want, using flags or DFFs to provide that information.
Yeah, absolutely. So leveraging system capabilities and encouraging self-sufficiency by operational teams is also key to releasing finance's time. Alongside automation, an organization does need to consider where tasks should lie. So should it be the finance team holding the business's hand, or should they actually be undertaking tasks themselves? I think finance leaders also need to consider the skills and capabilities required as part of any technology investment, and if there are gaps, how to fill them. They need to create a culture which promotes continuous learning and encourages innovation to help their teams adapt.
Thanks, Gareth. I'm going to tie into an article that actually one of our founding directors, Tom Holmes, wrote, and he was actually comparing the birth of HR. Sorry, I should say he was talking about HR, but comparing the birth of ERP system to the post-pandemic environment. I think this is also true for the finance teams as well. For businesses that are grappling with how to better support, motivate, and incentivize their workforce, they could now be on the brink of a new and exciting revolution.
Yeah, and you can't not agree with that, can you? But by focusing on the upskilling of employees as well as the digital landscape, organizations can retain and develop their own talent, helping to mitigate some of the impact of labour shortages.
Ewan, any questions in the chat now?
None at the moment, but I did have one. I guess in terms of, we said to kind of highlight how important it is for finance leaders to look at this, but obviously each business is bespoke. But what's kind of the main sort of blockers for finance leaders not to look at this at the moment? And I guess how do you overcome them? Is it sort of the macroeconomic factors that are putting stresses on businesses that mean that we feel like we don't have the time, or what would that barrier be?
There could be multiple barriers, to be honest with you, and some of it can be time, to be frank with you. People are reacting to situations that arise straight away instead of planning for the future. Part of it could be about how their organizations are set up. Change can be quite scary, especially if you've done things the same way for 20 odd years, for example. It can be quite daunting to think about how you change that with a team that's been established. People like to do things the way they've always done them. So when you're starting anew, it can be something that is daunting to a team. Also, people are scared that it might affect what they do on a day-to-day basis, or have an impact on their career or their current job. So there are other aspects to think about.
Yeah. No,
Gareth, is there anything else you wanted to add on that? Sorry, Ewan.
No, I was just thinking, so one of the things I found really interesting in a couple of organizations I've worked in is, Jackie mentioned it earlier, is forward thinking. So actually taking the time to step out of your BAU activity and set a period. I did this at Diabetes UK a few years ago now, and we looked 23 years ago in front, because that was actually thinking about, that was a timeline for them. We looked at 4 different lenses, so technology, commercial behavior, communities, as well as kind of systems and things like that. And we kind of looked through each of those different lenses, thinking about, let's go wild and think about what the world might look like. And we wrote up a load of stuff, thought about, and what do we as an organization need to do to remain relevant in that situation? And actually, a lot of the stuff we thought about, which was kind of came off the top of our heads, it's already playing out in the real world, in the technology space particularly. So we were saying, oh, you're going to have an app that you can manage your diabetes on, and blah, 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 blah. I don't know whether you've seen the advertising on TV, but there is an app that you can manage your diabetes on now. And it was so thinking for the charity how they remain relevant in that scenario and make sure that everyone is being included and things like that for the charity was a massive driver. So just taking that time out and actually stepping back and go wild with it. You don't have to restrict yourself and just think about where is the world going now. Think about some of the things that might be, might happen that you don't think will happen, and then see what you would do in those scenarios.
Yeah, we've been very reactive in the past, haven't we? We've waited for things to happen to us. Now we need to be much more proactive. As COVID shown, no one would have planned for a scenario quite like COVID's lockdown, but it did happen. So now is a chance to actually think about the what ifs, other things happen, what other eventualities could possibly
Jackie,
happen.
there's a question in the chat that says, do you think that finance leaders should partner very closely with technology leaders so as to co-design the technology strategy across the enterprise? I would say yes, and I would broaden this and say you need to involve the HR community and all of your back office functions, really. I think when we go on to projects, we make sure up front that this is not an IT project, it is a business project, because sometimes the IT teams have a tendency to go wild in the aisles and just push everything into the technology space without thinking about what the impacts on the business and end users are. But absolutely, it's really, really important that technology leaders are included in that. And all of our projects, we have tech leads on all of those.
Yeah, perfect. I think that's kind of probably all the questions at that point for that stage. But yeah, it makes sense. We work with I speak to a lot of finance leaders, and the hats you have to wear in terms of different things that you're looking after, especially if you're in an SME space. You are kind of the technical sort of lead on these projects, and it's good to lean on other people within the business who might have that knowledge outside, especially when it is going to be something that affects wider business in general. But I think we'll leave the questions for that part now.
Let's move on to the next section then, which is very much about a search for a perfect chart of accounts. There's a screen up there that's just summarising some of the points I'm going to make, but we'll start with a poll. Do you think your chart of accounts at the moment is fit for purpose? Yes or no? So I think we all know that the chart of accounts is your underlying structure for organising financial information and reporting in an organisation. When you're thinking about designing a new chart of accounts, it's worth keeping in mind this statement I've taken from a colleague. Keep as simple as possible and as complex as required. So you're seeing up on the screen, I've got an arrow showing that. So just a couple of points on this. Keeping it simple will reduce the maintenance overhead. It will provide a structure that is easy to understand, and it allows for more efficient processing. Plus, it will provide clarity and transparency to the user. complex as required. So why do you need to make it complex as well as simple? And that's really to ensure you have visible governance and to aid the user experience, i.e. the different peoples in your team that need to use that information. And thank you. It's great to see quite a few people are happy with their chart of accounts, but there are a few others that would want to revisit their chart of accounts, might be a way of putting it.
And just before you drop in there, Jackie, I'm just going to kind of give a real life example on this. So Jackie and I worked in the same organization as finance, in a finance team. And actually, when we joined, they had a plethora of cost centers and all the rest of it. And they had them for very good reason for them. But one area in the HR space had 19 cost centers just within recruitment. And that was because they needed to be able to cut and shut their data in different ways, and they hadn't had anyone from the finance space describing to them how they could better organize and better kind of understand their data. So using different parts of the segment within the chart of accounts to actually give them that different granularity of information, or using WBS structures or whatever to do that. So it's a really, adding that value doesn't mean to say that you can't get the data you want out of a system. You can absolutely get it out, but let's just make sure that we're not over engineering things, because like running that many cost centers took a hell of a lot of time, a hell of a lot of conversations and forecasts and everything else. And we basically dropped it down to one cost center in the end. So you can do it. It's just making sure that you hold the hand of the business users as you're doing it.
Yeah, and help them understand the hierarchy and how that can be used. I do remember one of those cost centers had one line on it. So you don't really want to have a cost center with just one accounting line on it. And one thing I will say is, if you do implement a new chart of accounts, you definitely need to get that structure right before implementing. So first, consider all stakeholder requirements, not just finances. Of course, you want to ensure your chart of accounts aligns with regulatory requirements, but you also need to consider requirements for management information for different stakeholders to help them facilitate business decisions. It's a good time to take a temperature check of what works well with your current chart of accounts and what doesn't, to help you understand what you need to retain and what can be improved. This will help you understand the specification you need in a new chart of accounts. Do consider the dimension segments you will require in future. You need to consider your hierarchy needs. The chart of accounts should reflect accountability in an organization. And of course, it should align to your HR structure. When it comes to implementing the chart of accounts in a system, you also need to consider which order is logical. This will aid any rules you put in place for fixed values. For example, where you've only got certain departments can record costs of specific accounting code. Because of that fixedness, you might want to think about your ordering to help with those rules. One client I worked with mentioned that actually when they sent up their previous chart of account, it became out of date quite quickly, and they ended up using their spare segment within weeks of going live, as there was a new requirement. So a lot of clients do add a spare segment to ensure there is flexibility in the future. Do remember your chart of accounts isn't just for today, it is for the future as well. Data needs to be consistent across areas, and of course it needs to be well maintained. So when considering the code structure to be used, keep in mind that they should be used in a standardized way, or reporting will not be aligned. I worked with a company where projects in one area was under one default project code, and the individual projects were then held at task or WBS level. But in another area of the business, projects were at project code level. But it meant that actually when we were reporting, we had to pull a number of reports together. We couldn't have just one report showing spend on individual projects across the organization. Also, there is no need to reinvent the wheel. So, and I'm going to wait for Gareth to snigger here, because there is a code here that I always struggle to get out. But when you're considering your product codes, the UNSPSC codes can be your starting point.
Got it
These
right, Jackie.
Okay, these are the United Nations Standard Products and Service Codes, and you might want to expand or contract them to see more or less detail depending on your organisation activities. Obviously, you want a structure that's easy to understand, and each segment in your chart of accounts should be used for one thing and one thing only. There's a reason for this. If you use a segment for a singular purpose, it will simplify the hierarchy maintenance.
And why is it so important to get this right the first time round?
Thanks for bringing me back to this, Ewan, because I did say that statement earlier on, actually. Once you begin using your chart of accounts, depending on the system to be used, making changes to the fundamental attributes is difficult. And it is really not recommended. And this includes the chart of segments that will be used. It includes the segment values, the data format, and the length of the segment. It doesn't include adding new cost objects such as subjectives and account codes. So you really do want to get right before you go live with it. So if you are planning to implement a new accounting system, it is worth considering now how your future chart of accounts should look. Ewan, is there any questions in the chat on chart of accounts or any other subjects?
Not at the moment. Let's see if anything else sort of comes through. I guess when you speak to your clients about this, do you have any? Obviously, we're trying to address most of the main things they'll say, but is there anything that sort of comes up as a key theme, from their side that we haven't already addressed?
I think a lot of the time, it's the recognition of how the hierarchies build within a system and making that consistency. As Jackie said, if you end up with one part of the business that wants a cost center structure that has 3 layers within it and another area that wants 6 layers within it, none of their reporting is ever going to work together. So when you want to see a consolidated report, you can't. You have to manually manipulate it. So making sure that you get an understanding of why people need things, what other alternatives there are for meeting some of those more granular kind of leveling things that some teams want, but just making sure that you can come up with that single approach is really key, I think.
And also considering the fact that you can cut your hierarchy in different ways. When we talk to a lot of the government bodies, they're very much thinking about OSCR reporting. So the reporting they have to do to the Treasury team and how that will be rolled up. Well, you can have an alternative hierarchy to help you with that. If you want your management information cut in a slightly different way, you can look at the hierarchy for that as well. So you're not limited with a fixed hierarchy with some of the new accounting systems. So that's something to consider when you're thinking about your future reporting.
Okay. No worries at all. I guess at this point, if anyone, like I said, has any sort of further questions on that segment, or I guess anything that's kind of been covered so far, just ping them in. Obviously, having Gareth and Jackie here as a resource is really valuable. So any questions or anything like that, let us know. But other than that, I think in terms of content, is there anything else that you two would like to cover at all? Or?
No, not really. No, I think Jackie's going to do a little dance for everyone now.
The music
5 minutes. I think you can feel that, can't you?
Absolutely. I promised an Irish dance at the end of this. So I'm doing it now. I promise. I'm doing a jig.
You're doing very well because you can't see any movement above the shoulders.
No, perfect.
Okay. Yeah, no, well, just to say, if you've got any additional questions, or if you want to kind of look at discussing any finance transformations with us further, please do reach out to Jackie or myself. We're more than happy to jump on a call or a Teams thing, and I promise Jackie will dance stood up for you next time.
That's a really big promise. Yes, please do reach out to us if you've got any conversation on finance processes, how to improve them, etc. Do please reach out, and we'll put you in touch with the right person if we're not the right person.
Yeah, and just from our side, we'll say thank you to both Jackie and Gareth for being so informative, putting such a sort of thoughtful presentation together, taking their time out and to speak to us. So really appreciate it. Thank you two. And thanks to everyone that's attended. Hope you found this informative. Like I said, any questions, ping them through.